Hi, this is Joseph. It is Thursday. It's September 17th, and I want to show you not only a trade that we executed here that resulted in approximately 80 pips, but I want to show you my ideas and concepts on trade selection, trying to allocate capital where you need to, which currency pair is likely to provide the best opportunities. And one of the things that I go back to all the time is, in addition to counting the waves and using point and figure and the candlestick charts, I'm also using volume with the futures. And so if I'm, for example, trading the pound dollar, I'm going to be watching futures, pound futures. You've probably seen that in some of the videos here posted in the Facebook group. I also teach how to use these methods and how to track futures volume accurately in my Real Deal Traders course. So this is exactly what I'm teaching my coaching students, and the results today were 80 pips for most of my coaching students that took this trade. So let me go ahead and start with the Bank of England rate decision today. That was a break right here of this support level to the downside, and it provided a decent opportunity, not a huge opportunity. And some people decide or choose to stay away from trading the news because of how volatile it can be. So one of the things that I said to my coaching students today was that if you didn't trade the Bank of England, don't worry about it. We're going to get another opportunity. It's just a matter of waiting for it. So as price is starting to settle, we can see that it's forming a low. We can see that it's forming some support, and I'm going to show you what the candles look like, the candlestick charts. So this is my pound dollar 1 hour time frame, and I prefer to use this time frame for intraday trades. It was pretty obvious that after the Bank of England moved to the downside that we were going to see some kind of a reversal. Not only here in the indicators, these simple indicators will show some divergence, but it's the futures volume that I'm using to gauge the change in direction or change in character when I see a move that starts to look like it's going to be bearish and may continue, but ends up reversing. That's what we're looking for. So it will show up in the point and figure to give me a precise entry, but I need to make sure that I'm trading a real reversal, that it's really going to go the opposite direction. And you'll notice how different the pound dollar is moving compared to the way the euro dollar is moving. I haven't traded the euro dollar. There really isn't much change here going on over the last 7-8 hours. There's nothing going on. So there's no reason for me to try and get into a trade, even though I might see some signals. There's no reason for me to get into a trade here on the euro dollar when my money could be better spent stepping up to the plate and executing a trade here on the pound dollar that's likely to move further. Again, I'm tracking that by counting the waves, watching futures volume, and then waiting for a point and figure trade, and then realizing, of course, the way the market reacts. The market's going to react today on a day like this with the Bank of England, and it's not uncommon to see this type of behavior. It's that crowd mentality. It's the way that people trade. You have so many people participating in a trade like this. Obviously, we're not seeing an overall big move. It really hasn't broken out of this range, so the people that are likely to be participating are usually the people with very little experience, or maybe the same experience year after year, and they really haven't improved their trading skills to understand why and how the market moves this way. This is something that I teach in my Real Deal Traders course. It's important that you have that ability to read how the market is reacting or who's playing the game today in this trading range. That's one of the things that's going to help you identify these key levels of entry. So back to the point and figure, we had an area of resistance right here. There are 8 levels of resistance that solidify this resistance point here. Now, it looks like there's a few other opportunities to try to jump into the trade. But again, this is my way to select the choice trade opportunities and the entries that are likely to move quickly. Again, we want to allocate capital. We want to put our money into a trade that is likely to reach the take profit level when we get into the trade relatively soon, as opposed to getting into a trade that just goes sideways, flat, that doesn't go anywhere the way the euro dollar looks. It's not going anywhere. It may eventually pick up some momentum later on, but right now everybody's, in this particular instance, they're more or less trading. There's more volume, there's more activity here on the pound. So the pound dollar was the trade to get into. That was the one that was likely to result in a move like this. The entry is as, of course, it takes out the resistance, and I see that change. The 1.2899 was my entry. The first target is 20. Now, these targets right here, I usually will have my coaching students, I suggest that my coaching students, I should say, scale out at these levels initially when they're learning these strategies. It's going to put some money in their trading account. They're going to build up their confidence levels. They're going to see that it works every single time they do it correctly. And when they do make a mistake, they're going to see how relatively easy it is, or simple, I should say, how relatively simple it is to earn that loss back on the next trade. So scaling out at 20 isn't a bad idea. And sometimes it'll do that. Sometimes it'll just kind of pop right up and then stall right around a psychological level. In this case, that's exactly what it did. And some of the coaching students actually closed out half of their position here at 20. Now, this is something that you hear me say all the time. The second target, if it's 50, these again are psychological levels, the 20, the 50, the 80, and then the 00. If you are hands-on and the trade is moving towards that second final target, and you can see that there's a lot of activity. Of course, we're tracking volume, so we see more volume rush in at this time. And you can tell that it's likely to go a lot further. You can trail the trade straight to the next take profit level, or the next psychological level, which would be 80. Some of my coaching students traded it, skipped right through the 50, and they closed out the second half of their trade right there at 80. So this trade actually paid 80 pips. I traded it to just above 80, so I earned 82 pips. My coaching students earned 80 pips. Some of them actually held on just a little bit longer when it popped right through, and they were able to grab an extra 5, 6, 7 pips out of the trade. Now let me show you what this move right here looked like, and why I say that if you are hands-on, meaning that you don't set a take profit level and then walk away when it's down here at 20, when you've already closed the first half of your trade, and you're thinking, well, I still have the second half of my trade open, I'll just set a target there at 50. The data here was telling us that it was likely to exceed the 80 level, or at least hit the 80. But again, initially, when you're learning a strategy like this, it's much, much better to take pieces of these moves until you can establish confidence in your ability to read the charts so that you can trade it to one target exclusively. You can get in at the right location, take that trade straight to that one target. But in the meantime, you want to scale out. So again, when I say if you're hands-on, the final target, if we're looking at, let's say, the next level of 50, for many coaching students that are relatively new and using a method like this, if they're there and they're hands-on and they have their hands on the mouse as price is moving through that 50, what would it look like? Well, you would trade it to 80, and this is what it looked like on the 1 minute candle. This is a 1 minute candle of the pound dollar. This is what took place from a low or an open of 16 all the way up to a high of 97 on this Forex broker. All of this happened in 1 minute. So again, if you're hands-on, here's the 50 level. This is the 50 psychological level that coaching students would consider perhaps closing out the trade. Sorry about that. It's right there at 50. So we'll just call that 50. Sorry. There we go. So 50. And you can see how it just pushed right through it. There was nothing to worry about. It doesn't always happen like this. That's the one thing I want to remind you of. It doesn't always work out like this. Sometimes it'll take a little bit of time, but you can see that everything is still intact. And there's nothing wrong with the trade. There's nothing to fear. There's nothing to worry about. It doesn't look like it's going to reverse. You can tell based on the way the market reacted after the Bank of England this morning that it was likely to move just like this. Everything came together with the psychology, understanding the psychology behind the traders that are executing today based on the price structure, the volume, counting the waves, and using my point and figure charts and those intraday setups on the point and figure chart just like this. This trade resulted in 80 pips. Some of my coaching students earned a little bit more than that. This was an 80 pip trade. This was perfect. You have to be really specific about your trade selection. And if you don't know how to do it, it's important that you do it, because you're going to make more money. You're going to lose less. You need to understand why the market moves the way it does, who's participating at those times, how to read these key support and resistance levels, count waves, use volume, and of course, I'm always going to come back to this point and figure setup. Intraday trades using point and figure. 80 pips. You can do this, and I'll show you how.